Now, even before the deal is inked, there are signs that the preliminary agreements and mutual backing off of further tariffs are already having a positive economic effect in this country. China's imports of soybeans from the United States surged in November following the announcement of the interim trade deal. Imports shot up more than 50% year over year. And that's huge for soybean growers. Fact is, though, overall, the Trump economy is now poised to outpace the Reagan economy. And Christmas 2019 is another merry indicator that, well, to a certain degree, I think we can officially say we're in boom times. Joining me now from Dallas, Texas, co-founder and chief strategist of GDP Advisors, Seth Denson. Seth, would you agree? I mean, you and I are old enough to remember the 80s. This feels a heck of a lot like the 80s in certain ways. Certain ways it doesn't, of course, and maybe that's a good thing. But economically speaking, you think we could say we're in a boom time?
I don't know how you can't say that we're in a boom time. I don't know about your portfolio. Mine has surely resembled what's going on. I mean, listen, the S&P is up 50% since President Trump has taken office. 50% returns. That's unheard of. As a matter of fact, if you take what is going on in our current economy today and apply it to any past president, removing the name Donald Trump, you see an approval rating in the mid-60s. It's shocking that we don't have an approval rating as high as in the mid-60s right now, given the economy.
Well, yeah, it is shocking, unless, of course, you factor in the mainstream media and the Democrat Party pounding this president for 3 solid years. So, yeah, it's going to affect a certain amount of people when they're polled. But we look at the online sales this year for Christmas. Amazon up 60% year over year in their fulfillment. That's a crazy number. And still, again, we're kind of sounding like a broken record in the jobless claim department. But here we go again. The jobless claims are down near rock bottom.
Yeah, you know, in all fairness, I think that my family was probably responsible for about 50% of those online sales this year. But no, we did our part. But the reality is, you're absolutely right, Graham. The economy is in a phenomenal position. Joblessness down. The markets are up. I mean, if you continue to look at the growth of the economy and what it's done, this is just unprecedented.
Trump the bull. I mean this in a nice way, right? I mean, this is an incredible Donald Trump bull market. And those of us who supported Donald Trump in the 2016 election cycle understood what was going to happen here to the stock markets, and it's exactly what has happened. The S&P, you were talking some numbers just a couple minutes ago there, but look at the S&P, up 28% in 2019. So for the 3 years for Donald Trump, year one, the markets overall up 19%. There was a drop of 6% in 2018, and that's largely because of the tumult between the United States and China over the trade deal. But in 2019, as you pointed out, what a recovery. Up 28% on the S&P? Are you kidding me?
That's right. And you know what's important else to mention here, Graham, is that if you look at the world economy is up with President Trump in the office. So this America First model that we're operating on today, it's good for the global economy as well.
Yeah, and you have to remember that the average return for the average president is 6% in the stock market per year. 6% versus 28. It's an incredible, incredible number. Seth, thank you.